The Bankers Committee, under the auspices of the Central Bank of Nigeria, has promised to continue its collaboration with the federal government's economic team to execute President Goodluck Jonathan's reform agenda. Speaking to journalists at the end of the committee's third retreat in Lagos, the governor of the Central Bank, Lamido Sanusi, reiterated the need for monetary and fiscal consolidation to achieve financial system stability. The CBN chief also announced plans to make job creation a top priority while supporting the removal of fuel subsidy and the creation of the Sovereign Wealth Fund.
The end of the year is usually characterized by stock-taking and an opportunity to chart a new course for the coming year. This is the essence of the third retreat of the Bankers Committee, organized by the Central Bank of Nigeria. Here are representatives of the commercial banks, the Ministry of Finance, the Central Bank and other financial institutions in the country.
The objective of the retreat is to ensure that the Nigerian banking system plays a role in catalyzing the growth of the real economy, essentially. And the way we work is that between our regulator, the central bank, and the operators, under the aegis of the Bankers Committee, we come together to brainstorm on issues and to come up with strategies, and set targets with respect to improving the economic performance of Nigeria.
Some of the resolutions reached at the meeting include financial inclusion, aimed at bringing unbanked farmers to the banking system. Of importance also is the need for coherence for both fiscal and monetary policies, the removal of fuel subsidies, and the building of the Sovereign Wealth Fund.
The Bankers Committee will continue deliberate advocacy and partnering with the economic team to implement the economic reform agenda to grow the economy and create jobs.
As we move closer to the new year, one task that must be properly handled is safeguarding the economy from external shocks.
The EU challenges, and we hope they are resolved. If they are not resolved, would have an impact in Nigerian economy and, of course, the Nigerian banking sector, as opposed to being caught napping, which was what happened in 2008. This time, scenario planning by the regulator, scenario planning by operators, the constant future of how we look at the economy, and stress testing.
A lot of issues may have been raised at this retreat, but what is paramount is the proper execution of drawn-out plans and the realization of its objectives. Bolaji Akinwale, Channels Television News.